The most powerful financial seat in the world just changed hands. Today, May 13th, 2026, the Senate confirmed Kevin Warsh as the next Federal Reserve Chair in a 54-45 vote, the closest confirmation margin in the modern era. He takes over from Jerome Powell on May 15th. And what almost nobody is connecting right now is what this means for your silver, your savings, and your purchasing power. There's a critical window between now and Warsh's first FOMC meeting on June 16th. The old rules are loosening. The new rules haven't been written yet. Today I'm going to show you exactly what's happening, what history says comes next, and 3 specific things to watch before this window closes. Quick disclaimer. Nothing here is financial advice. I'm not a licensed advisor. Always do your own research. Now, let's get into it. Here's the big picture. The United States is carrying over $39 trillion in gross national debt against a $31 trillion economy. Public debt to GDP just crossed 100% for the first time, closing in on the all-time record set after World War II in 1946. Back then, the country didn't pay the debt down. They inflated their way out of it over 28 years. The technical name for this is financial repression, and it quietly looted an entire generation of savers through below-inflation interest rates. They never saw a withdrawal. Their purchasing power just evaporated. Warsh is walking into this with a White House pushing hard for rate cuts, a $6.7 trillion Fed balance sheet, and a war in Iran pushing oil above $100 a barrel. The conditions for a repeat are all there. 3 statements from a Senate testimony you need to know. Number 1, Warsh promised independence, saying he won't take orders from the White House. But here's the math. The Fed funds rate sits at 3.50% to 3.75%. CPI just hit 3.8%. Even modest cuts from here put real interest rates at 0 or negative. That is financial repression, whether he calls it that or not. Number 2, and this is the one nobody is covering. Warsh told the committee he doesn't fully trust the Fed's official inflation measure and wants to shift to the Dallas Fed's trimmed mean gauge, which currently reads 2.3% versus the official 3.0%. That gap is not a rounding error. It's potentially the justification to cut rates even while traditional inflation numbers say don't. If he redefines what inflation means, he creates his own green light. Number 3, Warsh is not a fan of forward guidance. The Fed's practice of telegraphing future rate moves in advance. A Fed that surprises the market more than it signals is a fundamentally different animal. Every data release becomes a guessing game. For silver, gold, the dollar, and your portfolio, that's a structural shift in how price action works. Here's what this means depending on what you're holding. Cash and CDs, you're the target. Below inflation rates are the mechanism governments use to dissolve debt at the saver's expense. You don't have to like it. You just have to decide whether you want to keep parking wealth somewhere, losing real value every month. Physical silver, coins, bars, allocated holdings. Your position is among the most insulated. The $39 trillion debt overhang structurally limits how far real yields can sustainably rise. Silver isn't just a monetary asset. It's industrial. Solar panels, EVs, semiconductors, 5G. The world has consumed more silver than it mines for 6 straight years. That demand doesn't care who chairs the Fed. Bloomberg. Paper silver, SLV, PSLV, AGQ, you're more exposed to volatility around June 16th. AGQ, with its 2 times leverage, can swing 20% in a single session on a binary policy event. If you can't stomach that, you're sized too big going into June. Stocks focus on companies with pricing power and hard asset backing. The 1946 playbook is clear. Winners were equities that passed costs to consumers, and real assets generating income. Losers held fixed-rate paper. 80 years later, the categories haven't changed. Section 4. 3 Things to Watch. 4:30. Between May 15th and June 16th, here are 3 things that don't require you to predict anything. 1. The dollar index. If Warsh signals even mild dovishness, the dollar weakens and every dollar-priced asset, silver, gold, oil, gets a mechanical lift. You don't need to forecast it, just read the chart. 2. The COMEX registered silver vault. That's the physical metal backing the futures market. It's been draining for months. If that drain accelerates while paper prices stay calm, the physical market is tightening underneath the noise. Smart money watches inventory before it watches price. 3. The language of Warsh's first press conference, June 16th. Watch whether he references the trimmed mean at 2.3% or sticks with official PCE at 3.0%. That single choice will move silver, gold, and the dollar more than the actual rate decision itself. Charles Schwab. Intro. Warsh himself called for regime change at the Fed in a CNBC interview last year. Now he has it. The last time America ran this playbook, it lasted 28 years and quietly moved trillions from savers to asset holders. The people who came out ahead weren't the smartest or fastest. They were the ones who understood the direction of travel and positioned before everyone else figured it out. Investing.com Canada, May 15th, is not just a handoff, it's a starting gun. If this gave you a clearer picture, a like and subscribe helps more people find it before June 16th. Drop a comment below. What are you holding right now? Cash, physical, paper, stocks? I read every single one. Stay sharp. Stay positioned. See you in the next one. And that's a wrap. If you learned something today, hit that like button and subscribe to Covered Wings, because we're just getting started. Remember, let your money fly. I'll see you in the next one. Don't sleep on it.